Hi everyone, it's Stuart here again. Welcome to the first full trading week of 2026. And what a weekend! What more can I say? Unbelievable news. But never always expect the unexpected, as I say, in the markets and in politics. And have we seen a president like President Trump before? Don't think so. History will perhaps colour his post terms on what's happened this weekend. But anyway, that's not necessarily a sideshow because we've seen oil moving up and then moving down. We've seen gold rallying quite significantly. We see this big move here. This is the euro dollar here today, down quite significantly in the last hour. We've been as low as 116.60, not quite into this 116.50 zone, but we're certainly dollar, a bit like the Swiss franc and the yen earlier, got a bit of a lift. The biggest mover, though, on the news from the weekend in the markets that we offer here is the gold market again. Gold, silver, and copper. Copper went over $13,000 a ton on the LMX this morning. The LME this morning in London. Gold rallied. In the early hours of the European trades to where we are now, basically 4,435. We went down over lunch into lunch, and now we've bounced again as the US markets have got into full swing. As I say, first full week of trading for 2026 ahead. Lots of data to come, topped by the non-farm payrolls on Friday. We got ADP on Wednesday. We got JOLTS on Wednesday as well. We got the PMIs coming up. The manufacturing PMI is coming up in about 15 minutes, and the services PMI is also on Wednesday. So lots and lots to get through. And that's just US data this week. Obviously, January next Fed meeting at the end of the month, and more and more talk in the markets over the weekend and again this morning, not necessarily on the back of what happened over the weekend, but expecting of some saying no more rate cuts for 2026. There was one guy talking about that on CNBC this morning. Others are saying no more rate cuts, certainly from why Powell's still chair, possibly 50 basis points. And that's really the consensus, 50 basis points, possibly plus with for 2026. More to come. The risk is to the downside, so more than 50 basis points cut. But I think it was Bank of America we're talking about 50 basis point cut after Powell has gone in May. No sign of that from the White House today about who's going to be the new Fed chair. But obviously that to come in the next couple of weeks as well. Obviously, next couple of weeks also we got the earnings season kicking off as well. So all sorts going on. Guys, if you've got anything you want to have a look at or any particular, let me open the chat box. Any particular asset you want to have a look at, let me know. Other than that, we'll go through the main ones we trade. I shared with you this morning on Discord my sort of bit of handwritten spreadsheet on the returns for 2025. Let me see if I can find the images. I've got the pictures somewhere. So just before the data comes out, I'll show you how well or badly we did. I don't know you want to call it such. Excuse my Marrakeets at the moment. I just find these downloads. It was these two. This is this one. So we just open up that. There's a screenshot. I did a quick just a bundled Excel spreadsheet from what we'd done last year. So basically, we were trading, or I was trading 40 odd weeks of 2025. These are the points for the weeks of the year. So yellows when I wasn't trading, or we didn't have any skin in the game. So 3 weeks off in November, a week off in February, and 2 weeks off in towards the end of May for our wedding anniversary. But there we go. So we didn't have a losing month. This is the points per week. So we had a few losing weeks. I think 8 or 9 losing weeks. The red ones. Remember that the big numbers here are skewed by the points gains in the indexes. So you take that out, and obviously it doesn't look as good from a points point of view. So don't get too carried away with that. Oh, he's made thousands and thousands of points. The point is that we win consistently. When we lose, like we had 2 losing weeks here, Again, the numbers look quite big on 2 losing weeks here at the beginning of December, but we turned it around for the end of the month. And that was simply this big points number there, 2,000 points. Sounds fantastic and massive. And yes, it was very positive. We had a big gain on the gold trade, but it was still percentage wise, that was nearly 5% move in one trade. So what I always want to try and explain and show and demonstrate to people is that anybody can do this. It's about having a system. This is all based on the end of day time frame. All these trades, the individual trades that make up the individual weeks and the individual days I post. Mostly, I wrote 97%, I think, on the posting on the Discord page. It mightn't have been as many as that, but most nights I will tell you what I've done, and it's live. It's and I give you the price that I've got in, whether I'm long, I'm short, my stop loss, my target, and then I update that during the week or the following day or whatever's happened. But so I'm not making any of this up. This is what's really happened with my one of my end of day trading accounts. So again, 80% win rate on an end of week basis. But the key thing is when you have these losing weeks or the losing days or a string of losing trades, not to get too hung up on it. By the end of this week, we were already long gold and it was moving up quite nicely anyway. So we hang on to it for best part of 2 weeks, and it was our best week, ironically, that week of the 26th that ended on Boxing Day, the 26th of December. So, never give up, keep going, keep doing the same thing. It's your process that's the key thing to success in trading. It's not, the amount of money you've made or the amount of money you've lost, or it's, did you do the right thing? Did you follow your rules? Did you get out when you were, 1 or 2% of your account? Did you get out when you should have got out? Did you, on the flip side, when you're winning, did you let it run as far as it could run? Did it turn around and come back on you? That's what I always do. I'm trained followers, so that we get to a peak, it turns around, comes back and stops me out. So I never get out of the top, I never get in at the bottom of a trend, but or vice versa if we're short. So it really is all about you, success in trading, my friends. And just as I say, if I can do it, anybody can do it. I've just been doing it a long time now, and I still get a kick out of being successful more than anything. Rather than, obviously the money's a side nice, but it's a side issue. So anyway, where were we? I've lost you, and let's get the charts back. Where's my trade locker gone? Right. So this is the gold chart. Let's say if we had a look at euro a minute ago. So gold has benefited. Let's say copper, I haven't got it here, but copper went through 13,000 a ton. Silver also a really well bid, $76 again today. So silver and copper, gold have both rallied quite significantly. Some individual oil companies have done quite well. Conoco and Exxon, both previously big investors or in Venezuela. Before it was the oil industry was nationalized there by not Maduro, what's he called? Hugo Chavez nationalized the oil industry in Venezuela. So Trump's talking about running the country, but obviously the oil is the main reason. Let's be honest. And his oil companies, he's a big fossil fuel fan. The reason they're really there. But anyway, silver $76.82, and as energy, the oil market rallied. Well, so in fact, it as we opened trades, we were falling on expectations of more supply coming on. Particularly, Venezuela isn't a big producer. It's going to take a long time before that infrastructure will be sorted out, and some significant investments. And are the American companies really going to take this, backed by the president? They probably will take the risk. As I say, Conoco, Phillips are up about 6% last time I looked, and Exxon were up about 5% in the US trade. So initially the oil market fell, and we went under the $56, or went down to $56 this morning, and then we've rallied. We've turned around in European trades, particularly on the European Open, and we're higher again, and we're at $58 again on that action. So OPEC came out and said over the weekend, they had a meeting anyway, regardless of what was going on in Venezuela. They're going to maintain supply, so hence the initial move down this morning Yeah, all unbelievable news out of Venezuela, and I think he's in court at the moment, isn't he? I think that was the story it was happening. Maduro facing the wrath of U.S. justice, but was he kidnapped? Looked like a kidnapping to me, didn't it? But anyway. One rule for Mr. Trump and one rule for everybody else, one could argue, and many are doing just that. So oil up to $58, gold bid, and that's continued. That's been a continuing move all day, and the dollar bid as well. You see the turnaround in the oil market. Crypto also lifted quite well, and obviously crypto was being traded during the weekend as the news was breaking. So here you can see on the hourly chart up. The 4-hour chart, big mover as well this weekend. Is this the excuse it was waiting for to break out? Well, we're back to those zones we were talking about. The key news this morning on bigger volume than we had over the weekend is that we're through the 92,000 handle. So we've been ticking up. We've been in this upper half of the Bollinger Band here on the 10 on the 4-hour chart on since the beginning of the year, the 1st of January. And obviously every day is a trading day for crypto. So big move there. That was the announcement breaking on the 2nd. And off we went through 90,000. And I say for me, that would have triggered a buy from my trend following through that 92,000 area. Next is this 95 blob we put on last week. So let's see if that continues to rally. But we've had a good start to the new year. So were the whales buying down here? This chatter of 85,000, or the price went into 85,000 twice, as we said. We were looking to the downside. The bears were looking for 80,000, and then that 75,000 were the three key lines in the sand. This didn't break, or hasn't broken again, the 85,000 handle since the 19th of December when we first went into it. So, and we didn't test the 80,000 again from the end of November. So this is looking relatively positive here for Bitcoin, and the wider crypto market as well has benefited from the rising dollar as well, rising gold. So gold's up significantly. Silver, copper, as I said, the commodities continue to rally. Dollars up, and also Bitcoin is starting to move forward as well, as yields still cooling a wee bit at 416 on the 10-year. Where are we? Oh, I've just missed the data. Sorry, I mean blethering on, and we've missed the key data. Let's have a look at what those PMIs look like. So this is Forex Factory calendar, and today's data is the ISM. It hasn't updated because that's an old one. So 48.3 was expected, 48.2 last time, and argument being it's missed by 0.3 of 1 point, so that's quite significant. But more significant is that we're down a whole. It was expected to tick up just 0.1, but it's down 0.3 from last time, 48.2, and we've missed by 0.4, and we've come in at 47.9. So as with most other countries in the world, to be fair, we have a negative PMI, which, remember, they're forward-looking manufacturing in contraction, remaining in contraction, and this first reading for the new year is one of the worst ones for a while, isn't it? It's the worst reading we've seen. If we just take the forecast off the brown ones, so you can see it's the worst reading. It was worse than the August reading, and it's the worst one, just in pure terms of this particular year, since November 2024. So it's the worst reading for manufacturing looking forward. Remember, that's what PMIs are. Remember, Purchasing Managers Index. It's the worst reading since November 2024. So not great. That then might add expectations for something to stimulate manufacturing, which is obviously a rate cut. But I said chatter this morning really has been. We'll come back to the later in the week later. Chatter this week. Sorry, as I said earlier. Cancel. Has been for less optimism for rate cuts going in. Sorry, to move it into my other screen down there. There we are. Going forward. So just have a look at euro and the forex markets, how that's reacted to that. So euro 116.17. So there's the euro up in this last. That's a 4-hour candle. So we've been sending. There's that 16. 50, 1660, in fact, here on the hourly candle, and euro come back since lunchtime and up. If we come back to the 5-minute candle, how it's reacted to the data we've just seen at 3 o'clock. There's the, let me zoom that up. The 3 o'clock candle, been moving higher anyway. Sort of held its gains, really, hasn't it? As we're 5 minutes in, so the data's come here. Euro's pumped up, a bit of weakness for the dollar. But on the game we've seen for the dollar today, you know, it's still bid from Friday's close as well. So 1660, it's been our low today, and we're now at 1691, some 30 pips above that. Here on the hourly chart, can we get through sort of today's resistance, key resistance area here? If we put in like where the day started, is there's Sunday night up here, we were at 17, holding 117. So we've been all the way down to 1660, 40 pip move. And we're back to still shy of 117 to the upside for the euro against the dollar. So dollar's had a good day. It's losing a bit of its gains at the moment, giving about half of it back at the extreme against the euro. Let's have a look at against the yen, 56, 156.63 against the yen. Similar sort of move, bigger move. This morning in the European Open, we had yen was bid quite well. 156.50, the bottom of the Bollinger Band here, and where we got to this morning, and now we're now at 156.60, having spiked to the 157 area. So dollar still bid, and you see here on the hourly chart against the yen, but yen came back up to obviously buyers at this 156.50 zone here, where we had our extent that should have been down there, shouldn't it? I drew that the other day. Our key zone through here. So 156.50 is seeing buys for dollar yen over the last 3 or 4 days since the new year started. The high got higher. We topped at 157 this morning and 157.30 this morning, I should say. And then we've come back down. So again, similar pattern to the euro. The lows of the day we are up from that, but perhaps drifting back low following that key data. The first key data point for a very, very busy week, as I said at the beginning, topped by non-farm payrolls on Friday. So 156.50, the new low for the year, if you like. So, we haven't been down there since the end of December. So the new 2026 low, 156.50. But key buys here on the hourly chart, 156.50 here. So yen. So again, goodish day for the dollar, given some of its gains back, but now it's giving a bit more back. Dollar was up against the loonie. We got to 138 over the 138 handle. We're now at 137.75, so a 25 pip decline from our height. So again, similar pattern there. Sterling 134.80. This morning in Asian trades, we went to 134.20. It looked like 134 was in target. Since then we've recouped 134.50 and we're at 134.75. So again, sterling coming back a bit more aggressively than other currencies. Save that big spike at 1 o'clock, which took us back to 134.25. Obviously, lots of positioning starting off for the new month at the moment as well. So here on the, let's take this up a bit. Look at the upside target. So the 4-hour channel, a bit of sideways action, sort of downward, a bit of consolidation here at highs. We can't hold. Well, my cursor is at the moment 135. Since the end of the year, so we've been dollar been in bid mode to start the new year at the moment against its major peers. So recovery of 135 would be key for more strength in the cable position and support. You can see on the 4-hour through where our stop loss take profit area was right about 134.30 from September. The last trade we had there was December for cable. Aussie Where's the Aussie gone? There we are. Oh, there it is. 66.95. So stop 67. So again, it's at the upside range, top of its range for the day. But you can see here a strong 4-hour candle. It's still not complete, but a strong 4-hour candle for the Aussie, having drifted into 66.60, still above the 66.50 area. So 67 becomes remains the resistance for the new year for the Aussie. And the Kiwi finally 57.75, a weaker Kiwi, higher anticipation up there at .58. But again, another one that's weak in the sense it's gone back under the 57.50 area before it's come back in the last couple of hours today as well. So 57.50 support zone. And there's our extended resistance area we talked about from last week at .58, and this support area on the higher time frames at 57.20, and then 57 itself for the Kiwi. But the dollar remains bid so far for 2026 against the Kiwi and against most of its key rallies as we've just seen. And Swissy 79.45, dollar holding that gain there on the 4-hour time frame. The hourly time frame is also a bit more volatile, as we've seen with the other currencies. So far, our top today is 79.67, and we're currently trading at 79.43. So again, even on the hourly chart, the 20 period, the midline of the Bollinger Band has held since last night's opening trades, and we're holding up the support, this low of 79. Found buyers yesterday and again this morning. For the for the dollar against the Swiss franc. So again, dollar holding its gains there against the Swiss franc, having been hammered somewhat in 2025. Indices started relatively on the front. That's just the dollar ones. I remember those big gains we had for 2025. Earnings coming around the corner in a couple of weeks. Non-farm payrolls, obviously the first big data point, but we got some interesting ones before that later in the week. I'll bring the calendar up again in a minute. So the Nasdaq trading currently at 25,445, Nasdaq 100, and big shakeout on the second on this hourly candle. You can see there at, as the US market opened, we were down on Friday's close, weren't we? Got two calendars going on. S&P closed at 6,845. We were down on Friday. I haven't seen you since the close of that week. I basically closed out my trading account for 25 on Friday. And sorry, just bear with me a second. Yeah, the Nasdaq was down. We were out that trade. That was early in the day, wasn't it? Not 31st. Sorry. Second, where did we close? Yeah, the Dow was down 2/3 of 1%, 0.66%. The 10-year Treasury closed at 4.187. So we're down again this morning on the Treasuries, 4.16. The 10-year, and the Nasdaq was very, very flat into close on Friday to close out 2025 for my trading account. That was at the final week, the fifth week 53, and the the S&P 6,858, a gain of 13 from the previous session. Is that right? 30. Yeah, the Wednesday. Obviously, no trading on Thursday. So stocks starting. Just got the daily time frame. Starting 2026, relatively on the front foot. We were down on the final day of the of the old year. We were down again on Friday in that curtailed week, and this is the first full trading week of the new year, and we're up today. Lots of data to come to decide where we're going from here. But as you can see here on our zoom this in a bit on our strong trends for 13, 14 years now. Nasdaq leading the way last year with the gains in yet again the gains in the tech heavy MAGA 7, and then the big AI stocks as well, or the smaller AI stocks below Nvidia within that group. Mycon's had a really good end to the year as well. AMSL, and TMC all doing really well. but a bit of compression here. See how the legs are it's getting shorter or got shorter. So it was a longer leg, shorter leg, and short leg here. So the big trend is broken. Big support at 24,000. We currently trade at 25,400. And again, you'd say the bit of a down, depends how we to end the year, but profits being bagged, and we're pivoting right through that key golden ratio of the last leg before last, at where we are now at 24,400. See, this is 61.8. This is his last leg down. Then we had a leg up, which is just checking we're moving down. Shorter leg there. So the last move here, if we just remember fib level, that's December the 12th to the end of the year, takes us back higher from a fib extension point of view. So we've done this many times before. So the 78.6 is now the top of this last leg. We didn't get that high this time. Has that leg finished a bit too early to tell until a few days, see if that's another compressed leg from this top on the 26th of December, 5-6 days. But remember, it's much lower volume, lots of risk off the table. So the significance of that leg is less significant, shall we say. So the bias is still to the upside. However, if we've looped at the top here, we've got this big consolidation up here. So the 20-day moving average, you see here, the middle of the Bollinger Band, up, down, up. So we've got this M-shaped curve, so sideways action, horizontal Bollinger Bands now over the last few days. So there's our range. So some key levels to watch and wait for a break to one way or the other. 24,000 being the big support at the downside. Obviously, we're a long way from that at the moment. An outside break would be a break back over that previous fib level, which now sort of coincides at the top of the last leg at 25,800, and then the top of the Bollinger Band. If this gets more, the volumes are likely to increase, so the volatility could increase rather than compress. So the top of the Bollinger Band is currently sitting around 26,000 or 25,980. Call it 26,000 for the sake of a few points. So 26,000 first resistance to the upside, and then all these other areas up here start coming into play. 26,500, 27,600. And the extension of that one, 26,500, 27,600 will be the first upside targets during February if this breaks out to the upside. Break below 24,000, and then there's lots of fresh air because we've gone up really nicely. We could come down really aggressively. So, just see what the earnings look like. Remember, we had a really strong, better than expected Q2 and Q3 last year. Let's see what Q4 looks like when the banks kick off earnings season week after next, or next week, in fact, isn't it? It's the the 5th today. Yes, that's end of next week. The Wall Street banks kick off their earnings. So Nasdaq consolidating on this daily time frame, biased to the upside, playing with the 20-day moving average. We'll see the similar pattern for the other US markets, less exaggerated though, isn't it? We did all this last week, didn't we? So there's a similar pattern there for the, let's see if that's it's not a play for some reason. So it's because of this. Reset. There we are. So again, similar pattern with the S&P 500, that last leg down there from Boxing Day into Friday, but again holding a key fib level, this one being the 61.8, 6,845, and up again today. So that previous high range there, top of that, those two legs there coinciding at 6,920 on the S&P 500. So again, similar pattern, compression, but a bit biased to the upside here at the S&P. We got a rising top of the Bollinger Band there. You see that a bit better there, so a bit more wider consolidation range. And the Dow, not as weak as the other two, although it did breach its 20-day moving average in low volume at the end of the year. Literally the final trading day of the year, bounced back significantly. Significantly today. Good rise on Friday. This is driven by the oils oil players, as I say, ConocoPhillips in particular, and Chevron lifting the Dow to a new all-time highs. That's interesting. New all-time highs, literally, as we've been speaking there. 49,000 breached on the Dow, on our derivatives Dow market here for the first time. So the Dow benefiting more than the other markets for this first full day of the first full week of 2026. So yeah, again, manufacturing in focus today, and it's disappointed, as we said. Let's have a look if gold's kept its bid as the dollar's come back. So there's the daily strong candle today. It's come down the time frames for the rest of the day. The 4-hour candle, again, strongly bid. All 1, 2, 3, 4, 5, 6 consecutive. 6 times 4 is 24, isn't it? So that's 24 hours of trading on gold has been positive. There we go. And hourly candles, we got a red one in them. We had a red one there, as we said this morning in Europe, as we got to 4,435, but we've moved up literally as I've been speaking. Haven't we? We were at this 4,435 as we saw the data coming in. So 4,450 breached again. So gold bid, silver bid, as we said at the beginning. I remember 4,550, our all-time high from around Christmas time. So gold remains bid and starting 2026 as it finished 2025. What a year it's had. So off we go. So let's go back to see the euro. I want to have a look at ahead of the week. If anybody's got anything, gold looking strong. It is indeed, Killian. We just got gold up here still. It's a very bid market. It's all with all this, with what's happened with Venezuela. It makes not the preposterousness of it, just the audacity of it, the organisation of it. Obviously, from the US point of view. Pictures of him, it looked like he was playing a video game. I mean, people have lost their lives in there. He was very quick to point out that no American lives were lost, but a life lost is a life lost, isn't it? And up to 40 people have lost their lives in that raid, audacious raid. But do you kidnap? I'm calling it kidnap. It's the words I'm using. Do you kidnap the president of another country despite how audacious or disgusting he's been to his own people? And again, how disgusting he's been depends who you ask in Venezuela there, doesn't it? Yeah, gold bid, Killian. Be careful trying to catch the top of it. Profit taking's probably done, as we said last week. It was really end of year stuff. I mean, the huge candle we saw was literally that. It was that combination of physical and the derivatives market coming together. But it was the 29th of December. We had a absolutely stellar year. And interestingly, we came into the previous high zone, didn't we? This 4,350 zone from the end of October, and that was the last big resistance. But we've been over $4,000 now. These are individual days, but if we look at the weeks, we've been over it into our 12th week. If we look at the weekly chart, 13th week, I think it is over the $4,000 an ounce for gold. So it was expecting a bit of a sell-off. It was a bit of a shock on the actual day it happened, but potentially profit taking may be over. And it's a new, obviously, technically, accounting-wise, it's a new trading month, it's a new trading year, new trading quarter. All that sort of stuff comes into play as well. Positioning, and really there doesn't seem to be any let up in the appetite of the big players, the big countries, the big central banks gobbling up gold. So the as much as can be produced is being produced and being bought on the markets. And obviously the same thing with anticipation of what may or may not happen in Venezuela, whether there is more oil supply coming to the market, how that impacts next steps, whether it's Iran, whether it's Cuba. The situation in the Middle East is far from fixed in that sense. Hamas is still around, still terrorizing parts of Gaza. The Gazan people have obviously really had enough. Ukraine situation grinds on. There may be some more positive news there, but for people like Putin and Xi Jinping out of China, what Trump did at the weekend, they're going to say, well, yeah, one rule for you, one rule for us, or have you got some sympathy with what we did in Ukraine, what we might do in Taiwan? Yeah, wow. And it's the Western eyes, the ones that are being sidelined, and there's this idea of the US dominating the Western Hemisphere, and the rest of the Western countries falling in line, and he lets Russia and China do what they want in the East. I don't suppose the Japanese, the Koreans, and other big democracies like Australia, New Zealand in the Western Eastern Hemisphere will be happy with that line, but never try and outthink the orange one, one would argue. So anyway, gold remains bid. Profit taking probably is over. But again, it depends how you trade and what time frame you trade. And you saw we held it from the 10th to the 23rd of December on an end of day basis. But I'd say that remains bid, Gillian, definitely. Again, so obviously 450 is the key date today, and we're up. So let's have a look. What's say everything's bid, so we're to the upside. So if we were trying to trade this, we've missed the open. It's an hour into the US trading day, and there's the Dow one we would have traded a big move to the upside. Maybe some signs. So that's the hourly, still significantly bid. Let's go down this time frames. 30 minutes, big move in the 30-minute one. Hourly chart. We did that, didn't we? Sorry, coming down, not up. Let's go to 10 minutes for the sake of now we had a blip for 10 minutes. It's crossed down, but it's then moved up, so that's not anything. The 5 very much against the trend. It's pushed out here, but it's still rising, crossing, so it's not significant short. That's still bid, even on the 5-minute time frame. I wouldn't be looking to try and catch a short on that yet because we're still moving up. So it's a continuation trade, the last one now on that 5 minutes. So stocks bid, particularly the Dow. So I've got the other one we like to trade on the short term basis, the DAX. Similar pattern on the back of the opening of let's put on there's the there's the where are we? That's the 330, that's the 230, I should say. That's the cash open in the US for the DAX. It was the stochastics here in an overbought area. It remains overbought. We dipped a wee bit. This is looking to go short. This particular strategy didn't happen. Moved down. Didn't get to target one. Remember, target one's the midline of the bond. That remains bid, and it's a continuation as it's crossed back up there. So you would have gone long again there. That's a continuation trade using this strategy there, whether although it's in an overbought area and it's very high, that's what happens. We've got a new high for the day. So this is this morning. We went to the high this morning was 24,820 again. So might be looking to see where that goes from there. So there might be some sellers. In fact, there will be. There are undoubtedly some technical sells set up at that high of the day. There'll be some others that are trying to take it longer. So this is the opening this morning in Europe, very bullish. We got to 24,820. There'll be sells around there, stop losses around there, just above there as well. And we've done a similar thing here. We dipped sideways and then rallied to that opening high of the day in the just post US Open just now. So is it going to get there? Is it not going to get there? But that was a continuation trade, even though the main trade should have been it was short and it's come back in. So we're looking for perhaps another touch at the outside of the Bollinger Band before we take this short properly, or it reacts very suddenly and moves back down very quickly. But there's nothing data there unless there's something, some announcement from Trump as he gets up. He's had a busy time, hasn't he? Or there's something comes out of the Maduro story in New York if he's in the court. But boom, yeah, stocks bid. So interestingly, there was the Nasdaq that was underperformed, wasn't it? Both the Dow and the S&P. So Nasdaq, there we are. It's turned me in the last 20 minutes. It's proved me a liar. There we are. So it's moving higher as well. So where are we? We are. It's 10:30 in New York. So they're an hour into trading, and it's a morning, Monday morning. Lots and lots of data to come this week. So stocks continue to move. Hi, let's have a look at the week ahead. Still lots going on this week. I've just got the high impact events here. So tomorrow or tonight, we've got inflation out of Australia. Sorry, not tonight. That's tomorrow. There's nothing on tomorrow. We're going to trade the open tomorrow. So join me for that. Wednesday's big day. We got ADP, services PMIs, and the JOLT numbers on Wednesday. We're live for that. Ahead of that, as I say, we've got Australian inflation overnight. If you're in Asia, watch that for market moving 3.7%. The annualized Australian inflation expected to slip a tad from last time. Thursday is the weekly claims, and then Friday, the 9th, is the ADP numbers. 57,000 is expected for the headline. Unemployment expected to slip to 4.5%. I just had a quick look at the Reuters poll from the big West End banks, the big Wall Street banks. And the range was 155,000 was the top, and 25,000 was the bottom. I can't remember who said either of those ranges. I should have better know that, shouldn't I? But quite a wide range, 125,000 range for the headline numbers, but much more consolidation on the unemployment rate, around about 4.5%. That's much a strong consensus for that on Friday. But let's not prejudge anything. Let's react to the data. This should be the first proper clean data. How much of it is correct, but it will be definitely clean data, because how much people have responded or for the request for data is a question that still hangs in there. Will we know who the new Fed or Trump's preferred nominee is by Friday? Probably not. Probably wait for the next weekend. I think the geopolitical news might run a bit more for the rest of the week. But yeah. So PMIs from the rest of the world as well. I've only got the US ones on here, but key start the month as normal with PMI data. We've started with US manufacturing, or finishing with US because the others came out last week. Also missing expectations and still remaining in that key contraction zone. So let me just leave you with that screenshot there. Negative manufacturing, and the worst number for a while, as we saw earlier. We saw this data coming in worse since we were back here, November 2024. So there we go. So if there's no questions, Killian, if you want to anything else you want to look at, let me know. If not, I will see you all tomorrow. We'll be live for I think it's the European Open tomorrow. Can't remember off the top of my head. I did share it with my colleagues, but anyway. Take care, everyone. We are the prop trade. We are the grown-ups in the room. So Nasdaq pushing highs, DAX pushing to the daily high as well, and it's just FTSE's down, isn't it? Interestingly, FTSE had a really good year for finally catching up, but moving higher. And I'll leave you with the S&P 500. 6,900 has been breached, 6,913. So strong, good, positive start for the S&P so far in this trading session. So take care, my friends. All the very best. See you soon. Be good. Bye-bye.